Hi, everyone, and welcome to today's webinar hosted by Six. Today's topic is going to be why silver demand keeps rising, why supply stays stagnant, and what you can do about it. So we have two great guests today. Chen Lin, who writes the newsletter, What is Chen Buying? What is Chen Selling? As well as Tavi Costa, who is a portfolio manager at Crescat Capital. I'm Peter Kraut. I'll be moderating today's panel. I write a silver-focused newsletter called silverstockinvestor.com and recently published a book called The Great Silver Bull. So today's format is going to be where we each do a short presentation, and then together, or amongst the three of us, we'll discuss some major points. And then we'll open the floor to questions from viewers. So as we present, anytime along the way, please feel free to post your questions to the chat at any time. So as I say, today's talk is going to be about silver, how demand is really, in my case anyways, my talk is about how demand is outstripping supply and what some of the dynamics are in this market. So silver mine supply is very much challenged. From what we can see, it peaked back in 2016. Supply has been falling for the last 4 straight years. Actually, the four years following that, it bottomed in 2020. Of course, that was exacerbated by the COVID pandemic, as a lot of mines had some forced shutdowns, or at least temporary shutdowns. There was somewhat of an increase in 2021, but certainly that has not kept up with demand, as I'll show you in another slide or two. But it's interesting to note from this slide that the forecast peak in silver supply is just in the next couple of years, and that it's likely supply could very well drop off following that. So that really certainly plays on the dynamics of the demand supply challenge. A really interesting point for viewers and investors to note is something specific about silver. The silver industry is that less than 30% of silver comes from what we call primary silver mines. So more than 70%, in fact, of silver comes from mining other metals, things like gold, copper, lead, and zinc. So as you can imagine, a lot of the silver supply, therefore, relies on the production of these other metals. And so the outlook, the demand for these other metals certainly plays into silver mine supply. And so I like to say that the silver supply is somewhat inelastic, because it's difficult for silver miners to just ramp up when silver prices go up and silver demand goes up, as really so much of the silver supply actually comes from simply mining other metals. And so in the case of a lot of those miners, the silver production from their mines is really a bit more of an afterthought. So with low supply and growing demand, that could certainly help, again, exacerbate things and lead to even higher prices. This chart from Capital Light Research is really interesting in terms of what's going on right now and what has happened over the last few years. So the gray line is the silver price. The blue bars are mine startups globally. And so to some extent, and certainly from 2000 to about 2011, 2012, on average, mine startups kind of followed the silver price up, which obviously makes sense. And then after that, for a few years, when the bear market started and the silver price came off, mine startups started to come off and then moved sideways along with the silver price. But what we've seen in the last 2 or 3 years is that the silver price on average has started to climb again. And yet new startups of mines has actually fallen off considerably. So that red arrow at the very end is a huge gap between mine startups and the increase in the silver price. And some of what I was explaining in the previous slide certainly likely adds to that disconnect. This shows us the new mines that come from different countries. So Mexico, Peru, and China are by far the largest producing countries. Mexico is the absolute leader. Peru and China are very close. It's difficult to get clear numbers from China, but in any case, in this slide, what we have are numbers from Mexico and Peru. Mexico being the green line, Peru the brown line. And as you can see, very much like in my one of my first charts, that supply has been falling off since about 2016. There's been a little bit of a bump in Peru, but on average, we've certainly seen supply fall off, and that's certainly concerning if you're anxious to access silver, because again, these are two of the largest silver producing countries around. So this shows us from 2020. The left side of this chart shows us how silver reserves have fallen off. The light blue bar was production. The teal bar was actually addition from exploration and discoveries. Then the red bar was depletion in 2020. So as you can see, by the time we reached 2021, reserves actually fell off. And so net replacement was negative in terms of reserves for 2020. More than likely, we're going to see a repeat for going forward. And the right side of this chart shows that M&A in this space is at a 16-year low. And again, that's despite the silver price averaging up in the last few years. So because of all of this, you have the Silver Institute that is forecasting that not only, showing us that in 2021, we had a silver supply deficit, about 50 million ounces. They're forecasting about 70 million ounces for this year. I think that's going to be revised upwards probably sometime soon. And they certainly expect supply deficits to persist over the next several years. So let's look at the demand side quickly. Silver is very unique and interesting in this respect. About half, or a little more than half, of all silver demand goes towards industry, and that's led by things like solar panels, EVs, electronics, medical applications. In fact, there are discoveries for silver applications almost on a daily or weekly basis. Silver is really a very versatile metal, the most conductive and the most reflective, and so it has some fantastic properties that make it very, very useful. About half of the rest of silver demand is some form of investment, so things like physical coins and bars, ETFs, jewelry, and then you have a bit of silverware and some photography, which had been falling off in the last few years, but actually Kodak just announced that it's aggressively trying to hire people to deal with processing the old school film because it's taken on a bit of a new life. So we've seen in the last few years, investment demand has been exploding. That's been both on the physical side, and it's trailed off a little bit in ETFs in the last year or so, but still very, very strong demand, and again, exacerbated by supply shortages. And if you look at the price of some of the silver coins these days, some of the most popular silver coins, it's incredible that we're really up at about 100% premiums over the spot price. Unheard of numbers, and these continue to persist. So if we look quickly at demand again versus supply, last year supply was up 4.5% over 2020, which was obviously a very low year again because of COVID, but demand dramatically outpaced supply by about 4 times. So again, very, very bullish outlook. Demand was up in all key sectors. Overall demand in 2021 was a little over 1 billion ounces. That was, as I say, almost 20% more than in 2020. Industrial demand was up 9%. Solar alone was up 13% to about 113 million ounces. It's the single largest industrial use for silver. And then you have electronic and electrical was up 9% to 330 million ounces. And as I say, investment demand, physical investment was really off the charts in 2020 and 2021. I'm sure Chen will talk about this a lot more, but I did want to touch on solar because it's so important to the silver industry. Really, solar is the single largest source of industrial demand. That demand was up 125% between 2013 and 2021. In 2021, it was up 13% over the previous year. This year, it's expected to be up another 12%, and this chart shows how silver loadings have been trailing off They were declining for about a decade, and then they've really been trailing off. There's only so much silver you can squeeze out of a solar panel and still have it be efficient and effective. And so solar panel installations are these, again, these green or blue bars, and that's been growing tremendously. And so the demand for silver from solar panels continues to rise incredibly strongly. Where does this leave us in terms of investment options? Well, I did touch on coins and bars right now. However, premiums are very high. You have physically backed silver ETFs. Do your homework. These are not all the same. But I think the really, really big opportunity as the silver price really starts to come into its own and climb again is going to be the equities, the individual equities. You certainly have ETFs. That's a lower risk way to play it because it's instantly diversified. Then you have royalty and streaming companies, large producers, growing producers, developers, and junior explorers. And that's where I think the biggest opportunity exists. We talk about how there have really not been enough mines coming to replace depleting reserves. But not only that, the activity in the silver mining space shows us that cash flow has been very strong, mining across the board. Silver is not an exception, but that money's not being spent on, it's being spent to some extent on exploration, but it has certainly not been being spent on M&A. And I think that the juniors and to the developers to some extent are going to be big beneficiaries when you have rising prices for producers, where they're going to use their shares as a currency to help them acquire much smaller companies where they've delegated the responsibility of doing the exploration. That's my overview. I talk about all of these things in a whole lot more detail in my book, The Great Silver Bull. You can find it on Amazon in a paperback or Kindle version. And again, if you want to follow my work, you can go to silverstockinvestor.com. You can find me on LinkedIn as well as on Twitter. And now I will open the floor to Tavi so he can do his presentation.
Thanks, Peter. Oh, can you hear? Okay, yeah. Thanks, Peter. I will. Great presentation, by the way, and I would love to share some of my macro views here as well. Some important disclosures. You can always find those in our website, but also in our in link of our YouTube page as well. One thing that I think it's important, look, from a macro perspective, we're seeing a very large move today on 2-year yields. It's the largest move since we've seen in the global financial crisis. And if you remember this move, which is really being caused by a market starting to sniff around that perhaps the Fed is going to have to pivot, which is not my view sometime soon, but I do think that's the gold would start moving earlier than other assets. And it's important to see that during that period, it was really the bottom for precious metals, but not the bottom for the overall market. Overall market actually bottomed 5 to 6 months later at much lower valuations than we have today. But precious metals really bottom around November and end of October, depending on the asset. During that period, and end up being the beginning of an incredible bull market for those. And one of the things I follow very closely has been the percentage of yield curve inversions in the markets. And today, that shot up to about 60%, which if we look back in history, and in fact, this chart's only going back to the 1990s, but if we go back all the way to the 70s, there's one thing that really matters here. Which is every time we reached the 70% handle, not the 60, they actually coincided with the decline in risky assets. And one of the things I thought was interesting is that we've never seen this ratio or this measurement go up to 60% and not continue to go up to 70. So I do expect that we're going to see further inversions in the yield curve. But more importantly is if you do empirical analysis of what assets perform during periods like we have today, in terms of when you get to very extreme levels of inversions in the yield curve, it actually favors the gold to S&P 500 ratio, which to me is one of the most important forms of protecting capital and really growing capital over time for the next 5 to 10 years. And to me, I think we're getting there one more time. If we go to the next chart, what we see is the same way the two-year yield is having a big move. Recently, we've had silver prices having somewhere close to almost 10% move on a daily change basis. And recently, we saw again that move. I believe it was 2 days ago. Silver shot up again on a daily basis. And the last time we've seen moves like this was also at the bottom of the precious metals market. I mean, if you're an investor and you're trying to hedge your positions, and if you're a person who is an institution trying to hedge silver prices and you're shorting silver prices, when you have those moves, those are really scared any investor to take up another position on the short end of silver prices. Usually those large volatility times in terms of on the upside tend to mark really good bottoms in silver prices. I do think we're probably headed towards another one of those. And this is why we keep looking for different ways to be investing in the space. One of the things we've had since 2020 really has been this upward move in commodities. Our funds have been really long commodities over time. I think the foundation for the commodities bull market has been here, especially when you think about the supply constraints, which have been all over in the last 3 years, really reporting the capex trends on that. And I think that the biggest chart for the following years is going to be the industrial change here in the U.S. and other developed economies. When we look at the manufacturing percentage of GDP in the U.S. is still a multi-decades low, I think that that's going to increase. And once you see that increasing, it's likely going to be the driver of the demand side for commodities, along with the green revolution, solar panels. I'm sure Chen is going to touch on that as well. But one of the things from another just a divergence that you can see here in this chart is the red line is just showing the equal weighted version of commodities versus silver prices. We didn't really see silver responding well recently to this upward move in commodities. We think we're going to continue to see an upward move on the red line, but I think silver that has a lot of a catch up to do here. And I do think that's probably we're probably seeing the bottom here for silver prices. I know I've been saying this for a while. We've been positioning for this for some time now, and I never knew which commodity was going to lead the way. If I knew oil was going to be leading the way, and I don't think you can be smart enough to know that. I think you can identify the foundation for the macro thesis, which certainly is here for silver. And when you think about times when we've had an inflationary decade, the beginning of an inflationary decade, which I think we're entering here, is very important to be allocating capital towards tangible assets. And I cannot think of anything right now, as of today, that is as cheap as silver and precious metals in general in this tangible asset realm. And I do think that allocation towards that will pay off very well in the following years. Just looking back, gold, if you're bullish on gold, you're certainly bullish on silver, just especially when you look at the gold to silver ratio. But one of the important things, as I was mentioning, this yield curve inversion problem that we have, which tends to really be aligned with steep recessions and steep declines in risky assets, and using gold as a real form of protection and becoming that reserve status. Remembering that just recently we've had Wall Street Journal putting on in the front page of their newspaper that gold has lost its reserve status right before gold started to move the way it has been moving recently, which to me it's an important contrarian point. But look at the gold to NASDAQ ratio right now. It's still at basically double bottom here, similar to what we saw back during the tech bubble. And you can see very similar charts in other ways. You can look at the commodities to equity ratio, which also shows that we're still at near 50-year lows in that environment. To me, it's another way of thinking about owning tangible assets relative to very, very expensive financial assets that we have currently. If we go to the next chart, just fundamentally speaking, well, we use the macro sort of analysis here so far, but let's just look fundamentally, which is even more important to me. I track this very closely, of especially the major companies that have more consistent free cash flow and more historical data for us to look back. And Barrick is one of them, which is not too related to silver. But remember, when gold gets moving and the miners gets moving as well, I think historically we also see silver going along the same pattern. And so it's important to look at the fundamentals for most of the miners, because it is very telling and an indicator of how cheap things have become. And here we're just looking at the free cash flow yield basis of Barrick itself. And the last 3 quarters that we've seen this was this quarter. And the last one was March 2020 bottom, where we've had most of the miners have an incredible move. And the other one was really in 2015 bottom for precious metals, which was also a time to be a buyer of those securities. And so, and the very last chart that I have is just looking at Newmont dividend yield. It's just how things have gotten ridiculously cheap recently from almost every metric that you look at on a fundamental basis. And here we're just looking at dividend yields. You're not a buyer of miners just because of dividend yields. That's just a supplementary part of the thesis. But it's very interesting how those companies are doing everything they can in order to attract capital. And one of the things they do, if that they've been returning more capital from a dividend basis and also buying back stocks in aggregate than what they do in CapEx. In other words, they're returning more capital to shareholders than what they do in terms of investing in their own businesses. Those are not signs that we are at the peak of the market for mining, at the peak of the market for commodities in general. Those are usually very clear bottom signs. And here we are again at a very near record, I would say, bearish sentiment for the space at a time when most risky assets are really blowing up. And to me, it's very important to see the break of correlations that we've seen recently, especially with gold prices relative to other inflationary protected assets that's supposed to be performing well in this environment and are not doing that. One of them is tips. The other one is we've been this break of the correlation between global bonds and gold itself, which tells me that there is some real buying happening already in the space. And so how do we protect ourselves, and how do we make money in the space? Well, to me, is really on the exploration side. Majority of the billionaires in the industry have made their money and their capital really in the exploration side of the industry. And so to me, building a portfolio with high quality assets in that part of the industry is probably one of the most important ways to make money. We've been thinking about really doing and really executing on a kind of a VC, a venture capital hybrid form of really going for big winners and really betting on large discoveries, which I think would be ultimately what attracts capital to this industry and really labor to this industry as well, because it's not only a capital trend, it's really also a labor trend that we've seen a secular decline of interest in geosciences, enrollment for undergrad and graduate students and so forth, and even the difficulty of most of the miners to be finding labor to work in their businesses. All right, that's enough for me. I mean, I'm obviously bullish on precious metals, and I think that translates into bullishness in silver as well. With that, I'm going to pass it on to Chen.
Okay, thank you, Tavi. Thank you, Peter. Great presentations. Yeah, I'm going to talk about silver for its industrial usage. You can see my background, the solar panel. I've been very excited about this coming solar panel revolution, if you call that, and the demand for the past few months, I mean, for the record, right? And today, actually, first time I'm able to share a key diagram. I got straight from China to see where we are at the solar panel revolution. Let's get started. So this is my disclaimer. You feel free to read through that. So this is just additional. I'm running my family asset, also write a newsletter at chenpix.com. I'm not a gold bug or a silver bug. You know, I'm not 100 bullish on them all the time. Okay, I exit actually gold and silver back to 2012, and when silver dropped to 12, March 2020, I pounded the table. Actually, I was hoping silver would retest 15 this time around. Doesn't look like it's going to happen. Look at the Peter presentation, Tavi presentation. Silver already turned the way up. I was hoping to catch a bottom again, but sometimes you do, sometimes you don't. And I see the silver, okay, silver will have one of the greatest run in history. And historically, the silver gold silver ratio can be 10, can be 12. So why do we have to be close to 100 right now? Let's see. This is a diagram I wish to share with you for everybody. I just got it this weekend, right? It's from China. I put some little bit translation there. You can see we are here. We are on the left bottom corner. You can even hardly see the bar over there where we are at the solar panel demand. This is for the next 50 years. This is called the most conservative estimate of solar panel demand in the world. In Chinese, actually, they are more strong. This is rock bottom estimate. And this is absolutely the lowest you can get. So look at this, where we are, and then where we are. Just if you think, oh, the farther away 50 years is too long. I mean, just look at next 10 years. The demand of solar panel is going to phenomenal. I mean, Peter already showed what happened in the past 10 years. I'm going to show you in the next 10 years, okay? This is about percentage. You can see about 30%. This is most conservative estimate. They think next year will grow 2023 with solar panel demand will grow 30%. The whisper number I got so far, next year may grow 100%. Because the solar panel just couldn't meet with the demand. This year, the solar panel manufacturer had to shut down their production because there's not enough silicon available. And next year, the silicon manufacturer came back. They will increase their silicon output by 100%. 100%, okay? And then solar panel getting thinner, right? It's getting thinner so that each panel will use less silicon. So just from that, they are gearing towards 100% growth next year. But they're usually, when you have this kind of hyper growth, they always somewhere else will break, right? Now, this year, the thinness, the tightest was silicon. Next year, there will be no shortage of silicon, but maybe some other things, maybe, and you never thought about. I mean, you saw it in China, alkaline already started growing up because alkaline was used for the process of grass. There may be other things. But I'm telling you, the 30% increase next year is absolutely rock bottom. And it's going, only way it's going up. So this is the main thesis. You can see we are at the beginning of this great revolution. And I welcome everybody to participate in this. And it could be, I firmly believe, that one of the greatest run of silver in our lifetime. So let's see. So I just compared, my title was the silver versus lithium. Silver is new lithium. I called lithium about 7 years ago on CNBC. And then the lithium is actually coming a little bit towards the end. If you're smart, you make a lot of money in lithium. Right now, you should consider to move on to the next potential hot metal. That's silver. You can see the silver, we're just going to take off like that. And next year, there will be sodium battery. If you may not heard of the sodium battery coming out, that will replace lithium next year. It's very, very hot. It costs half of a lithium battery. It's almost as good. So, but on silver, eventually, they will find a way to try to reduce the silver loading, okay, in the solar panel. Maybe 10 years from now, they find a new technology may replace a lot of silver. But right now, there's no way. And the silver loading factor is going up, at least visibly till 2025. So basically, we have solar panel demand going up, and then silver loading per panel is going up at the same time in the next few years. Let me show you. Right. So, and then also, this is not me. Okay, this is the International Energy Agency. It's a part of United Nations. They said which metal will be most needed. I saw one of the question was in the solar panel that they have their assumption is different assumption. Well, I'll show you later. But they say the first metal we're running out of is tellurium. Right, tellurium will take more than 100% of world tellurium. in solar panel in 2030, but their 2030 actually is very, very conservative. I show you it's more like 2025 or 26. The next is silver. Okay, silver will basically going to take a 30-40%, but they are using the loading factor going down. They're still using the old curve. That's all the loading factor going to go down. So the actually will go much higher. And then you see the differentiation right now from a little bit 10% all the way jump to 30-40%. That will require how much? 300 million ounces of silver new production. And then we have seen Peter's excellent presentation. There's no new capacity coming online in the next foreseeable future. So those are the metals that are interesting. You can see actually copper also interesting. They take a lot of copper demand, but tellurium is also very interesting. I'm also looking at the company, tellurium silver company. You know, we are investigating if a good company, you know, I'll recommend it later to my subscribers. So this is their IAE report. Okay, they what it does is what they see is the coming solar panel. Actually, there's a typo. It's July 2022. Okay, this year, not 2020. So what they see is a very slow ramp up of solar panel, because they want to reach their goal of carbon neutral. That's their goal. It's not real demand, but if you look at the real estimate in China, real demand, this will likely reach by 2025. Okay, so that's the goal you think about, and then you move backward, like this slide, you think about this going to be reached in 2025, how much more silver we needed. So this is a Silver Institute report on 2025. I think it's a little bit outdated. I'm going to meet with Silver Institute next week. I think they will correct this. I already talked to them. I tried to point out in my speech in the past few months that this prediction is not right. And then I think they will make correction because they was early, come from January. They're saying, oh, we didn't see the Ukraine war, didn't know the energy was so in demand. I think they have a good point. So we'll see what their revision will come. So when you invest, when most people are wrong and you're right, you can make a lot of money. So that's why I was so bullish on silver. And when we'll see when the new update from Silver Institute going to be. That's the loading factor. I think Peter also talked about the Silver Institute continue to believe the loading factor will go down per solar panel. I just show you this is in Solar Analytica. That's early this year. You can see the new technology of solar panel. In order to be more efficient, you need dramatically increase the silver loading factor. Okay, silver loading. This is also a report from China, and you can see the next technology TOPCon will be 25 to 50% more. The next technology HJT will be over 100% more. Of course, they will try to work on that to make it less and less. So the diagram will be have a jump, the new technology, and then they will gradually work down. Like that curve, right? The curve on the top, that will work. But on average, the silver loading factor will go up in the next few years. So, and then solar demand in mainstream. And actually, this is my diagram. This is actually solar panel on the lake, actually in China. So they found that they can generate electricity and then reduce the water evaporation. This is California. They haven't built that yet. That's in the future. They want to put the solar panel on top of the canal, so that because they're water drought, right? They need the water, and then they generate electricity. Also, the cover reduce the water evaporation. So, and then there's this double-sided solar panel. It's already in production. People find it actually just a reflection from the sun. Actually works well to put another side of solar panel there, okay, to generate, because you the same construction, you put the same infrastructure, put the same effort to build that, actually easier, and then you can collect another 20-30% more of electricity. Why not? So that's also increased solar panel demand and silver demand. And then this is something very interesting. This is a startup of in California, right? What they did do multiple layer HJT. If you notice that HJT is used most silver. Okay, they moved to multiple layer. One is using take infrared, one is take the ultraviolet. One is more red, one is more violet. So take a different spectrum of the light and generate electricity. So in this way, you can increase theoretical. Right now, theoretical limit is about 26%, right? 27, 28. And this can increase to 40 something percent. That's 2 layer. And if you can have more than 2 layer, you can increase that more. But that will demand a lot more silver. Okay, silver. And also, I'm just showing you the solar energy production. Solar is the cheapest way to produce energy right now. So that's why it just take off the solar panel, similar to electrical car. Once the technology become mature, everybody start to use it. So this is what I see. And the TOPCon, we talk about that. This new technology take off this next year. That increasing solar loading factor by at least 25%. There's some literature say 50. HAT take off the year after. That could increase the solar loading factor by 150%. Okay, so there's a lot of people estimate. Okay, this is a forward-looking statement. More than 50% of solar panel will be between TOPCon and HJT by 2025. You think about that, and then the solar panel demand, this will create a huge demand of silver in the coming years. So I feel like silver is very similar to lithium about 7 years ago. And I invite investor to take a close look. Silver is still cheap. It's a couple of days old, but now silver start taking off. I think that's a big bump today. And just a lot of people ask me about China. I just say, I have a lot of communication with China. The COVID lockdown are likely to end in 1 year. Okay, the people just couldn't stand that. There are people missing the ambulance, and people die missing ambulance. There are people commit suicide. Housing market completely collapsed. So there's a lot of resentment, and so there will be change. And the more stimulus coming, and there's one of these solar. So that's in my presentation. I have this my website. I partner with a good friend Jay Taylor, and we are very focused in one of the area is precious metal. Okay, thank you.
Well, Chen, thank you very much for that. Great overview, very detailed and very technical. Appreciate that very much. So I want to once more encourage all the viewers, if you have any questions, please feel free to add those to the chat, and we'd love to consider anything that you have to ask us. So why don't we now jump to the second portion, which was going to be a little bit of a question and discussion section for the three of us. I'm going to put a couple of questions out and just look for some feedback from you. So let's start with Tavi. What are your thoughts on what some of the biggest silver demand drivers could be over the next few years? So we've looked at different things right now, but from your perspective and from Crescat's perspective, what are your thoughts?
Well, something that's really in my mind, Peter, is again this manufacturing side of GDP, global GDP in general. I would say that back in the early 2000s, what really drove the commodity markets was China, having to build their own manufacturing plants and really serve as a bigger part of manufacturing relative to other parts of the world, and reducing that or increasing the reliability of those developed economies onto countries like China. Now, with what we believe to be the early stages of a deglobalized world, it's hard to believe that transition is not going to happen with a large increase of investments in infrastructure and a large increase of also reshaping the manufacturing plants in the U.S. and other parts of Europe and other developed economies too. So when you think about that and you look at the price of silver today, which I think will be a big part of that, along with other commodities, I think that's just not reflected in the prices at all. I think the green revolution is a real movement. Like it or not like it, I think we're going to continue to see fiscal stimulus towards that, and probably government subsidies and other forms of ways that will drive the demand of silver going forward in that part of the market. And I think that the most important one is going to be the demand of gold increasing, especially by this need for central banks to improve the quality of their international reserves. And as we see that happening, I think it's going to drive the demand for silver as well, because that is they're mostly. I've never seen a bull market for gold that is not also unleashed a bull market for silver, which tends to move even further than gold itself. So I think those are the things that are in my mind when it comes to the demand side of silver.
Okay, thanks for those thoughts. Chen, your thoughts. You did obviously talk about silver solar panels. I don't know if you want to maybe add a little bit there, but in terms of other potential drivers for silver demand, what are your thoughts and what's the outlook?
Yes, solar panel. I mean, there's some question also about that. Solar panel about 13% of the global silver out, exactly as you said, presentation. And then Silver Institute predicts this year will drop to 12%. That's where our argument was, right, in the past few months. And I think they will have an update very soon. I think it's probably go up 30%, more like a right. So from 13% global to around 17%. Okay, we'll see. I will talk to them in a week. So the question is next year, right? 17%, if we go to another 30%, go up another, that will be over 20% of worldwide silver going to solar panel. As your presentation, already in the deficit. And then we need another 30%, which is a lot. We demand another about 40 million ounces of silver. Where those come from? That's a question. But if the whisper number I got is if going up 100%, what if it's going up 100%? That will require almost 200 million ounces of silver. Where does the silver come from? So that's a question. I think eventually, I feel the solar panel demand will squeeze out all the other demand. Okay, so you can see electronic actual demand came down recently because of all these recessions in technology. So the solar panel will just continue to grow. It will take out all the other, become the single largest demand, and then people will sell their silver plate. We talk about that's the first round, and when silver price very high, people will sell their silver plate. They for money, right? They for food, for whatever. And then it go very high, I see it go to 50, easily take up historical high. Then people maybe start selling their coin for money. So that's the only way, because if we just solar panel just continue to take all the silver output in the world and more, we have running a huge deficit. That's what I see. The other demand, so silver is very emotional. I know you love silver. You have a great book. It's on Amazon. I should check out your book. So the investors are very emotional on silver. So when silver start taking off, you'll be all over on TV, all over where, but you first hear from us, right? From this little webcast. And then people will chase on that. It's serious. That's what happened in last time silver go to 50, right? It's just like that. When the Han Brothers went 50, last year 2012 went to 52. So and then historically we have silver gold ratio is more close to 10. Right now it's still close to 100. So there's a lot of room for silver to go up. Let's put it this way.
Makes sense. What about, I mean, you touched on the idea that, the demand from solar panels is going to kind of crowd out and take on more of the overall demand. But isn't there the risk that, let's say, that continues, but most of the other demand continues at even if it's flat? So let's say
Yeah, exactly.
demand, right?
even as flat, that's interesting. Yeah, because when the silver getting very expensive, which I see, there's some people will try to find a replacement, right? The technology eventually will come to significantly reduce silver in solar panels. So far, they haven't found any. I say already past 10 years, they couldn't find. They just make a silver wire a little bit thinner, a little bit. But now they find that you need to add more layers on silver on top. So actually, you have to increase. But eventually, it will come. But the cure of high price is high price. So silver price has to go up first. I mean, give you one last number you should remember. The cost of silver in material in solar panel right now is still 10%, a little bit over 10%. So there's a lot of room to go.
Agreed. That makes sense. Exactly. That it's a relatively small contributor to the overall cost of producing the panel. And so, as you say, the price can rise considerably before it really has a significant enough effect on the overall solar panel price. And so there certainly should be some room there. Let's jump to the next aspect, which is why has, and it's part of the title of this presentation, why has silver supply not reacted so much to this strong demand? Tavi, what are your thoughts? Why do you think that's been the case?
I think there's a lot of factors that are driving that issue. Number one, I mean, I'm mostly in the business of finding silver discoveries, new discoveries. And when was the last time we found one? And when was the last time we developed a large project in the silver space? And it's just liquidity for most of the miners has been dismal. And if anything, the Fed tightening policies and is reducing the availability of credit and capital for those companies to really develop new projects to be coming online. And so we've had most of the companies been forced to deplete their reserves over time, but not replenishing those. And the difficulty in terms of the geology side of finding new silver discoveries is already itself a big challenge. And then on top of it, you throw even the government interventions that have been very difficult to work with in terms of the pressure of not allowing companies to explore, develop, and produce natural resources as a whole, not just silver. And so, and the other factor has been just when you think about where most of the production for silver is coming from, it's not from very friendly geopolitically, as far as I would say politically speaking, countries, either Peru or Mexico and so forth. And so all those have been, part of the factor of why supply hasn't been increasing at all. And the difficulty of finding high-grade silver discoveries is a huge factor of all this. And companies are not spending enough capital looking for those. I mean, the number of active drills in terms of mining companies looking for greenfield projects is very low. It's probably at a historical low today. The other thing that we're seeing issues as well is just the capital spent in terms of that from most of the major companies has been very low. It's hard to find a younger person, for instance, who is interested in exploration. I mean, you don't start this industry from the development side. You have to start from the exploration side. And I think there's a lack of a younger generation that will be taking over some of the older folks that have done a tremendous job finding those discoveries. Who are going to be the new guys finding those exploration projects that will be developed as a way of really helping this green revolution transition that we may see. So yeah, there are no shortage of factors for why it is of our view that we're going to enter an exploration age because of those extremes. And so, and that's usually what takes to see those big pivotal moments in markets and economy and large trends is an extreme. And we're seeing an extreme in many fronts, from a labor perspective, from a capital perspective, from a political pressure perspective. And so it's too much. And I think we're going to see the other way. And maybe, a large silver discovery will attract interest in the space. And I think that that's certainly a possibility. And we've been focus in trying to be the investors of those new discoveries that may bring the excitement to the industry one more time, that can perhaps move a little bit the supply side back to its normal levels, or its levels that would allow the green revolution to really go on.
I'm just going to add a couple of points that obviously are related, but to one of your points about discoveries, that certainly I think is a big factor. The supply has to come from somewhere, and if you're not making the discoveries, because, well, as you said, there's multiple reasons. One of them, I think, and it's funny because it's almost like it's shooting yourself in the foot. We need silver we know we need silver, especially when just talking about solar panels for this whole green revolution, and yet mining is considered unpopular, or people don't want it in their backyard and all of that sort of thing. But it's getting more expensive for miners, traditional miners, let's say, to get financing, because banks are being encouraged to lend for what's considered green projects. These are not considered green projects. They're kind of like earlier stage green, because silver would be a metal for green technologies, but that discourages miners because they have to pay more to borrow, to be financed, and so on. So that's something that I wanted to point out. The other thing, and it's a bit of a chicken and egg kind of quandary, but the silver price is low. We know it's low. It's silver, as you said, Tavi, is one of the biggest bargains in the market right now. Hard to think of something that's more of a bargain. So at the same time, with silver so low, who wants to look for it? Who wants to mine it? It's obviously you're not gonna, if you're making some profit or kind of breaking even, you're unlikely to shut down a mine. But the supply response hasn't been there, and you're not going to encourage the industry while prices are low. So that, I think, at least in my view, that's certainly been a factor that's been weighing on the price. That can change very quickly. We've seen it happen multiple times. I think it's going to happen again. We're probably on the cusp of it now. But that's going to could change the reaction to looking for silver, to mining silver, but there's a delay. Miners are conservative. They need to see higher prices. They need to see sustained higher prices, sometimes for a year, a couple of years, before they'll even think of trying to crank up a mine or decide, this has been a dormant project. It's high potential. Now I'm going to start spending some money looking here on exploration. They need to see higher prices, sustained higher prices for some time. So, that could exacerbate and even help push prices even higher, because the market is even slower to react. So those are just some comments that I wanted to add. Chen, what are your thoughts on, how about this? If we were to get, and based on it's certainly in my opinion, Tavi seems to agree that recession's coming. If that plays out, which is likely, Chen, what are your thoughts with an economic slowdown? How could or how would that affect the supply of silver?
That's a very good question. Usually when there's a slowdown, the slowdown of industrial demand, silver usually get hit the hardest. That's historically happened almost every time. As we discussed, silver is a very emotional metal. It can move a lot on the way down and on the way up. So I see we are at a very interesting junction in human history. I see because it's a rapid demand of solar panel will eat all these excessive supply. And then, as you said in your excellent presentation, the silver output is almost constant. Going up and down, but it's quite flat. If you look at the decade long, it's very flat. One of the reasons, as you point out, was the silver is a byproduct for most of the mines. So a lot of those mines, they don't plan their production according to the silver price. They just continue to mine copper, continue to mine gold, maybe have a little bit of silver out there. The primary silver mine is only a few, very, very few primary silver mine. And then at the current price, even today's price, today I think went up $1, and I have to check. $21 is not a good price for a lot of silver miners, okay? I talked to a lot of CEO. I invest a lot of mining company. I talked to a lot of CEO, and then they all worry about if they're producing silver, but they worry about what if silver take another dip, then they're going to bankrupt. So seriously, how did they think? Can you think about expansion? How can you think about building new mines? So there's no new mine, primary silver mine. Okay, coming very few coming up. With only exception, the MAC has one, and the Silvercrest is, they're making good progress. When that's in Mexico, that there are also other places, but it's very tough. It has to be very high grade and very economically. The management had to make sure it's a really good business, even at the $15 silver. There's even lower, right? Think about that. So, but on the other way, the other part of the equation is right. It's also correct. It's like when silver really take off, those miners are going to make a lot of money, right? There will be at that Tavi point out, there's a lot of dividends coming. I can see that. You just remember the last bull market of silver, how well the silver stock do.
Yeah, I mean, you're right. You just have to look at what happened in 2020 over a span of maybe 5 months. Some prices were just rose astronomically. I mean, I have all kinds of examples in the book. You have some companies, especially in the junior space, but you had some 6, 7, 800% returns in the space of 6 months. It was just incredible, and that's exactly the kind of thing that you can get again. And I think is likely. Something interesting is that. You talked about how expensive it is to mine and given the current price, but all in sustaining costs, I think it's a bit low, but they're probably estimated on average somewhere around maybe $18 an ounce. I think that's too low. Inflation has kicked in. That's probably going to be a lot closer to maybe $19 or even $20 these days. And so again, who want to look at building mines or even looking for silver when you have these kinds of tiny margins? But like you said, the moment that silver price takes off and those margins expand, it's the companies with, it's maybe a contrarian kind of thinking, but it's the smallest margins that get the biggest impact when the silver price goes up, right? Percentage wise. So in that case, that's how you get that kind of huge reaction sometimes with these explorers or these smaller producers. There were a couple of questions. Somebody was asking about how, we've seen in the lithium space how auto manufacturers have started to step into the mining area because they realize that they absolutely need lithium and a reliable supply of it to be able to get and produce their batteries and so on. What are your thoughts, either of you, in terms of what if that same sort of thing we could see that happen in the silver space, where you'd have car manufacturers, or in this case, it would maybe make even more sense. A better parallel might be solar panel manufacturers getting into the silver mining space because they need a reliable source of supply.
Yeah, I can take on this first, Tavi, and. So there is two different questions. Lithium has almost zero above ground storage. Silver does. Silver plate, I sort of silver coin, and then there is also a lot of potentially other people. There's another person talk about recycle. There's other old film. When silver price is high enough, those supply will come on first. I saw the solar panel company invest in Tellurian. Actually, they were first solar used to invest in Tellurian because Tellurian could be the first one to go over 100%, right? You need more than silver. I think because of their decent above ground supply, that can last for a few years. So maybe at the later time of this decade, then when we run out of most of the above ground supply of silver. That's meant they were looking to invest in silver mining company.
Okay, Tavi, did you have something you wanted to comment on?
Well, look, I think the lithium space is one of the few things that look kind of a speculative environment in terms of the commodities or natural resource industries in general. I think once most folks realize how non-economic this is to really be mining lithium, I think this is going to perhaps change and re-rate some of the price of the assets that have been lift up recently because of those hopes of the major demand for lithium. And the demand for lithium can stay higher, but once I think people realize that this is not as economical from a mining perspective, I think now we're talking how expensive it is to mine silver. I mean, if you do the same calculation for lithium, is just kind of stupid to be making an investment there, in my opinion. But most of the institutions that we talk to are often asking us, wow, this is a great strategy. You guys are going after large silver discoveries, gold discoveries, cobalt, nickel. But what about lithium? And so the generalists are all in the space of lithium already. So I caution people on that. I think if there was ever a demand mismatch that there is in the commodity space, I think it's going to shift away from lithium and perhaps come into other things like nickel, cobalt, copper itself, and silver will play a big role into that as well. So one more thing to think about is at the end of the day, silver is a monetary metal too. I mean, we've been talking about the industrial side of silver because the price is just so low that the aspect of being a monetary metal is forgotten. But gold is the same way. I mean, it has incredible attributes to be part of industrial metal. Why is it not? Well, because the price is too high and the availability of it is too low. And silver, we know the availability is low, but the price is too low. And so it is allowing the demand for the industrial side to be higher than historically what would be probably. And so if you get prices of silver moving significantly higher, it will bring back this monetary aspect of the metal, which I think will be the case in the future as well.
Thanks.
Excellent point, Tavi.
Yeah.
I just want to add it. Just historically, gold-silver ratio used to be 1-10. So when silver really goes high, go to 50, go to 100, that monetary aspect will come back. You're right on the bullseye. And the second I want to add was for lithium was I talked a little bit in my presentation. I didn't want to distract that, but there's a sodium batteries coming. 2023 next year is a year of sodium battery. We will be able to hold on to a sodium battery, and it costs about half of the lithium battery, and then use all the other metal, use all the nickels, whatever, all the metal, but they replace lithium with sodium. The cost is cut in half because lithium is so high. Sodium is like less than 0.1% of lithium, and it's almost the same characteristic because in the periodic table it's just one down, right? So sodium is actually, I was told, it couldn't Chinese manufacture, most of the manufacturer actually solar panel as well as the lithium battery all in China. That's why I heard the sodium battery couldn't keep up with demand. Okay, there's component shortage for next year because demand was so strong. It's more stable than lithium battery. It charges faster, 3 times faster. It's better in the low temperature, like in Canada or other low temperature area. That works very good. It's just energy density is about 80 to 70 to 80% of lithium battery, but actually perfect for energy storage. Right? For the car, it will come, but because it's charged faster, it's more stable. Less likely to catch fire. Maybe it will take off too. So I'm not saying it will, but I look at the chart, the sodium, there's just not enough component out there because they need a slightly different component than lithium, but it will just take off like a rocket next year. So that's something you can keep in mind.
I'd like to add a point to what both of you said, which was about how silver is cheap, and then when it starts to move, it will take on its monetary characteristics, and people will pile in. And I guess really what I want to add to that is the idea that obviously gold is a lot more expensive. It's usually the first go-to, but when people move in herds, so when they see gold start to move and they feel it's expensive, they're going to say, oh boy, now what do I do? What are my options? What are my other options? And frankly, even if silver is $30, $40, $50 at that point, that's going to look a whole lot cheaper than gold does. And so that's why it attracts a lot of investment money, the investment side of silver, because people will feel like this is a way more affordable option than gold. And that, that's just one of the factors that helps drive it so much. And we're getting a little late, but I'd like to kind of wrap it up with one last question, which I think is fair to everybody. And I'd like to pose this to both of you. What can investors do, or what should they do? Chen, why don't you go first?
Well, personally, you want to have some physical. Physical silver is very heavy. That's the problem. Silver too cheap, and so you can there's an ETF out there. You can silver ETF. And then personally, I like to invest in mining companies. So it's very important. Silver is still too cheap. Okay, a lot of mining companies are struggling. So you want those mining companies that can break even or make a little bit money at current silver price around $20. So when, for example, hypothetically, okay, their cost is $20 and now it's $21, so they got like 5% margin. But if silver is $100, they will get 400% margin. The margin will increase dramatically. Okay, so I mean, for example, $30, they got they tenfolded the margin, right? So just give you some idea. I mean, 50. So but you don't want to right now. Okay, if the cost is very high, they may need to raise money. There may be dilution. So that's need to be very careful. So it's very, very much a stock picker's market. And I'm so excited. I've been in this industry for decades, and I can say I have been more excited about silver and silver stocks.
Excellent. Thanks. Tavi, some of your thoughts in terms of what can or should investors do at this point?
Yeah, look, I think my views have changed significantly over the years. And, it's been great that silver has actually not moved to the levels I thought it would so early, and allowed me to have a better learning curve about the industry and partner with folks that I think will help us to succeed tremendously here. In my view, as I said earlier, I think exploration assets are what we find the most appealing. And it's important that when we started to look at those assets, what we found was that about 1/3 of the things that we invested were just not onto anything, were just geologically false, what we thought that they were onto. Others, 1/3 was just haven't found anything yet, or more of a real estate business. In other words, they have very prospective ground and having very good technical teams, but unfortunately they haven't had the luck of finding mineral resource that is really economical and scalable. And the other 1/3 are the companies that have actually found either have discovery holes or have done tremendous work, and some of them are just lucky to find incredible discoveries here that the market has not been rewarding it. So when I think about that, today's environment, prices are so low that you're able to add to your positions on that 1/3 of things that have been working and are not yet rewarded correctly in the market. So things that have discovery holes, for instance, but are still being priced below 20, below 15 million market cap. Some of them have historical drilling. Some of them have issues that come along with it. That can be fixable, and therefore why we like to get involved. And I think this is really a great opportunity to be buying those, because the natural and traditional venture capital model is a model where you make money on 1 or 2 or 3 winners that make up for your other 90 plus losers on a percentage basis. But in this case, I think you can have a betting odds that are actually much better than the traditional VC model. So I'm very focused on building that type of strategy over time, because I do think that there's going to be new billionaires in the industry that will be built on back of those big discoveries that we will see.
Thanks. I'd like to kind of just maybe repeat a little bit of that. And I agree both of your points. I think that right now there is, as you say, Tavi, a huge disconnect with the price of some of these some of these stocks, especially the juniors. Huge disconnect between what they have and how that should be valued. And if you look at what the outlook is for demand, as we've certainly touched on quite a bit for silver, there's just no question that a lot of these plays should be valued much higher. And as individual retail investors, we have an advantage in the sense that we can be pretty nimble. Some funds have that advantage as well in terms of being flexible, being nimble, being able to take on important positions in certain companies, and to play the valuation gap. So in any case, I think that we've touched on a lot of great points. We have obviously presented a lot of really good information and ideas. I'd really like to thank everybody for joining us. I'd like to thank Six for hosting this webinar. I'd like to thank Chen for your insights, Tavi for your insights as well. And I hope everyone enjoyed this. If there were any questions we couldn't get to, we're sorry about that, but it looks like we managed to cover most of what was out there. And thanks everyone for tuning in, and hope we can do this again sometime again before long.